All right. Hello and welcome to yet another Value Podcast. I'm your host, Andrew Walker. And with me today, I'm happy to have Eric Markowitz. Eric is the Director of Research at Worm Capital. I believe he's referred to himself as the head research grunt. Eric, how's it going?
Yeah, I'm good. Thank you. Yeah, research grunt. That's fine with me.
Well, hey, let me start this podcast the way I do every podcast. First, a disclaimer to remind everyone who's listening, nothing on here is investing advice. Please do your own work, consult your own advisor. And then second, a pitch with you, my guest. I've heard of Worm for a couple of years. In 2019, when I was kind of deep in the Tesla Q universe, I think I've heard of Worm and said, oh, those guys are swinging really hard at Tesla. What crazy guys. But you and I connected after I read Worm's Q3 letter, which I said online. I'll say it again. It was just so enlightening to me. I really enjoyed it. It was really thought-provoking. It was all about marginal gains, and I'll be sure to include it in the show notes for anyone who wants to go follow it. But after that, we connected, and I've just found you to be a really thoughtful investor. And I think that's going to come out in the convo we have today. And I've really enjoyed getting the weekly Worm Crawler emails that you send out. Some great links in there. So really happy to have you on the show. That out the way, let's just turn to the company we're going to talk about. It's this little known, under-followed car manufacturer, Tesla. We can start by talking about how you guys found it. We can start by talking about all the misperception that everyone have, but I'll just turn it over to you. What do you want to talk about with Tesla?
Yeah, I mean, it's been a position for more than 5 years now. So it's a company we've covered and followed, and really spent years researching. Really goes back to our founder and CIO, Arnie Allison. Really sort of experienced the product himself firsthand. Drove a Model S, and I think for him that was the aha moment. Getting in the car, driving it, realizing what the potential was, and then also I think seeing the people on the street look at the car. So that was like late 2015. I think this was really before kind of Tesla had overtaken the media. I mean, there was still, even back then, a lot of commentary about the company. Obviously, it's led by a fairly well-known individual, and we can start wherever, but fundamentally, we believe that the company has really been transforming the overall transportation and energy industries. Obviously, it's a company with a massive vision. It's a company that I think is, for better or worse, largely still misunderstood in a lot of ways. I think that we are attracted to companies that are complex, and I think that we personally, as investors, find a lot of opportunity when there's a lot of disagreement about what a company is and isn't. So we're kind of drawn to companies like Tesla because they are their vision is so large and so grand, and they're actually sort of putting the pieces together to make that future a reality. So I remember visiting the Gigafactory 4 years ago at this point, and just seeing sort of the enormity of what they were trying to build and what they're still building today, and that's expanding internationally with gigafactories in Shanghai and Texas and Berlin. So big picture, it's a true disruptor. It attracts a ton of scrutiny, which is good. I think there's an element of if it's easy, it's probably not a great investment. This should be hard. We are attracted to super complex situations. Tesla just happens to be one of them.
Yeah. So I've got a lot of baggage with Tesla. I've always loved Elon Musk, if that makes sense. I love the vision, but a lot of the stuff he does, I always look at him like, oh. But you mentioned several times you think Tesla is misunderstood, and we're going to talk valuation. We're going to talk some of the questions that I've had with Elon and Tesla and everything going on. But what do you think maybe one of the main or a couple of the main misunderstandings of Tesla today is?
I mean, a classic one is, and you see it all the time, is Tesla's valuation stacked up against the other car manufacturers.
That was going to be one of my questions. Yeah.
Right. That's a chart crime if I ever saw one. I guess my perspective on that is it's fundamentally not a car company. This has been said by other Tesla analysts and investors, mm-hmm. but it is very much fundamental to trying to understand what the company is building, which it's a highly vertically integrated hardware and software manufacturing firm with a lot of optionality baked in with artificial intelligence and other sort of software enabled platforms. The first modality of transportation is a consumer facing sedan. Eventually we'll have the Cybertruck, and longer term we'll have the semi. But there are other verticals that Tesla is really pushing forward into, and so it's just not fair to necessarily lump it into how it values the valuation versus a GM or a Ford. It's a company with a much different DNA. So that would be maybe the first sort of, anyway, I see. Yeah, go ahead.
Yeah, let me push back on that. So you said it is a company that is vertically integrated hardware and software, which I don't disagree. Like if you've ever driven in a Tesla and then driven in another car company's car, like the difference in integration, it reminds me of that old Apple thing. Like, yeah, you could go buy another smartphone or something, but Apple, it just works. There's just like a little magic in the consumer DNA in the company, and Tesla's clearly got that. But why couldn't I go say, hey, GM is a relatively integrated hardware and software company, and yeah, they produce cars, but they're collecting lots of data, right? They've got a vision of doing other stuff. Like, why does then that apply to every other car company, or why is Tesla particularly unique in that?
And for a lot of reasons. I mean, start with GM is not building electric vehicles at scale. I mean, they've only built about 150,000 bolts, and they all had to be recalled recently. I think the principal difference is that Tesla has manufactured these cars since the very beginning with 8 cameras around them that's collecting data constantly, that's feeding into the neural net. No other car manufacturer is doing this. So Tesla at this point has many billions of miles of data collected from its fleet of million plus vehicles around the world. That's a data advantage that is not easily replicable, and the incumbents really have no chance of competing with at this stage. So we see a lot. I mean, frankly, going back like 4 or 5 years at this point, GM and Ford, they've put out a lot of press releases about sort of the future of electric vehicles and their participation in that future. If you look at just wheels on the ground, at the actual ability of these companies to manufacture at scale, it's a much different story. And I think that if I'm thinking about sort of the existential risk for investors, it's really looking 5 years out. If the incumbents really have the ability to sell a product that consumers really want. I mean, at the end of the day, the consumer decides who wins this disruption. I think it's fairly clear that Tesla does have a head start and an advantage, and consumers have gravitated towards Tesla. As investors, we like to keep an open mind and look at other brands, and even look at the incumbents and their ability to scale up and compete with Tesla. But if you look just a snapshot of today, the ability of the current incumbents to put a product that is really, from a range perspective or a software perspective, it's just not comparable. And I think you're seeing the result of that playing out in market share and sales. And ultimately, like I said, I mean, the customer decides, and that's really sort of how we view not just investing in Tesla, but across all of our positions. We look at sort of where customers are going to, and it's a pretty clear winner right now.
I might come back to valuation in a second, but you mentioned something with the neural nets with Tesla. They've got the 8 cameras around their cars. They've had these for years, so they've got this data advantage. And one thing I remember from when I don't really like, I think anyone who was a Tesla Q person, which I was for a while, right, has been proven dramatically wrong. And now my questions are being like on valuation, and I don't super care, right? I don't super care. No horse in this race anymore. But when I was really deep into it, one question I always had was, okay, they had the neural nets and that was great. But I would always wonder, like, to use something with that data would require huge amounts of R&D, a huge R&D budget, right? You look at what something like a Waymo or something would spend interpreting that, or even just simple neural nets that people run online. Like, it actually takes a lot of R&D, huge computing budget. And you don't really see that on Tesla's balance sheet, right? Like, I'm just looking at their 10Q. They spent $2 billion in R&D. I would assume neural nets included somewhere inside of that. Like, with that, they're doing Cybertruck, they're doing everything else. Like, it's not a huge research budget. So what gives you the confidence that neural net is one of the edges that they're going to have?
Yeah, I mean, for one, experiencing it myself, I think that even Tesla Autopilot is an incredible product that, again, it draws a lot of scrutiny, but if you actually sit in the car and take it out and, I'm not even talking about FSD beta right now, but just basic autopilot, it's best in class. As far as R&D spend, I take a bit of a different perspective there, which is they're highly efficient. I mean, so Tesla attracts some of the best software engineers in the world. I mean, there's no doubt in my mind that the team that they've collected, is one of the best, if not the best in the world, working on this problem around artificial intelligence. So I think that you see it playing out sort of in some ways as planned. The FSD rollout, for as much attention as it's gotten, maybe to the downside, if you watch some of the currently available videos on YouTube just of the beta testers, this is a product that's in my mind the closest to achieving full autonomy at scale. It's clearly not there yet, but we're progressing towards that future. We've looked at companies like Waymo and a bunch of the other LiDAR-based technologies. You hit a local maximum with LiDAR pretty quickly. It's an expensive piece of hardware, and ultimately the only true way to solve full autonomy is through vision. The car really just has to be incrementally better than a human at driving. We think that the car can do it with 8 cameras. It was impressive that the team took radar off of the camera for the next iteration of full self-driving beta. I think the system's only going to get better with time. And so one of the sort of, I think, limitations of the human brain is considering exponential growth. And the full self-driving capabilities, I think, is a perfect example of how hard it is to conceptualize how the increasing production of Tesla vehicles, having more data being collected out in a real world fleet, having more edge cases being solved, being fed back into the neural net, and plus just the insane efforts that the team is going through with Dojo and just the training computer. The system is getting better with time. So I think that there is a bit of patience required to sort of see this future play out. But everything that I've experienced and seen and people I've spoken with, it's highly encouraging about the future. Again, I want to caution, it's not perfect yet, right? And Tesla knows this, and it's an iterative process. And this is sort of what I was hinting at in the Q3 letter about just trying to keep improving the product, and it will get better over time. It won't be perfect, but it is all about the striving of improving the system. And so we see that certainly with neural nets, but also in the production capabilities at Tesla, just sort of reducing costs throughout the company while increasing the efficiency of the products. So it's just a culture of constantly improving and trying to increase the efficiencies across the board.
Yeah. One of the things you said on the best team, it just reminds me of when I was very bearish Tesla, they do the semi day or the AI day, and you'd hear everybody be like, oh, there's nothing new here. And then somebody told me once, they're like, you don't get it. This isn't for financial analysts, right? This is part consumer marketing, right? Tons of consumers are going to watch in. It's going to build up Tesla buzz. It's part marketing. Tesla has a $0 budget, and they're more buzzy than every other thing because Elon can, attract tons of people with tweets and stuff, but it's part consumer marketing, and it's part, hey, if you're the world's top AI researchers, come work for us. You're going to be at the sharpest, most fun, most edgy place to work. So it's consumer marketing, and it's marketing to potential people to work there because, the best engineer is worth 100 times more than the second best engineer or something. So that was one of the things that just really changed the way I perceive Tesla. And it speaks to the quality of the team you mentioned there.
Yeah, no, I think we're always attracted. I do think that talent can be a leading indicator for the success of a business. And so when you see top talent flowing to a certain organization, it's a good reason to take a close look at the business. And same thing with, an exodus of talent. I do think though that, because I'm sort of thinking through some of the headlines that I've seen over the last few years with Tesla, but also other companies about, so-and-so executive left the company and went to a competitor. as you know, I mean, all investing is part psychology and just weighting information appropriately. And so, as far as like if you see headlines around, well, so and so is leaving a company, um, it's just an input to factor in. But I think that you have to go a little bit deeper and really try to understand like the organizational DNA and the types of people that work at these places. Turnover will be high at super hard charging, fast growth tech companies. I mean, you saw that with, Amazon was another big position of ours and still is. I remember stories in 2016, 2017, how tough it was to work at Amazon, the turnover. As
Get
far
the
as
famous email from Jeff Bezos with either one character was either a question mark or an exclamation point, and either way, it wasn't good.
right, but those are the sorts of organizations that you kind of want to bet on. And so I think that as an investor, I'm personally attracted to companies where there is a sort of mentality around like, pushing hard and pushing things forward and not being, slow and just being sort of obsessed with the product and obsessed with perfection, because ultimately that will, bear out success. And you'll see over time, I think that the investment returns of companies that sort of have this obsession with product and obsession with consumer, those companies will likely win over time. And those companies also probably happen to be run by founders. They happen to be very hard places to work. They attract top people. But yeah, I mean, I think the goal with any sort of, like we want to find companies where just the top people are going there. It's a good indicator for us.
You and I've talked, and people can read your letters and see the positions were Tesla, Amazon, Spotify is one that we have in common that we talked about. But you just mentioned the hard charging, it's returns to scale, these winner take all type dynamics in these markets with infinite scale possibility. That's obviously a common theme through what you're investing in, what Worm's investing in. 20 years ago, that type of theme didn't exist. Do you think Worm could have invested like 20 years ago, or is it style just like particularly suited for today's market, which is likely to be even better suited for tomorrow's market?
Yeah, so I mean, just some historical background on Worm Capital. I mean, it was founded by Arnie Allison, who I speak to every day, and he was a turnaround investor for many years in the 90s and early 2000s, and he was kind of classic cigar butts looking for value. Really had a transformation in 2010, 2011, 2012. He was reading a lot of like Clayton Christensen, Innovator's Dilemma, thinking a lot about disruption, really focusing at that point on Amazon and AWS. So, his sort of, I think, aha moment going back to 2011, 2012 was, the internet itself was like our big bang. I mean, it was the defining moment for what changed the future of business. So we have this sort of like internal, lexicon at Worm Capital. We call it the fully connected world, and it's the single room hypothesis. So the internet created this entirely new structure of business where everything happens and everything's out in the open. There's full transparency. And so what does that do to valuations? What does that do to the ability to scale businesses? Ultimately, a lot of the reason why we believe this is a winner take all dynamic is just full transparency. No one wants the second best product. I think a good example that everyone can relate to is Google. I mean, you probably, I'm guessing, don't use Bing, right? I mean, because everyone knows Google has really the best search engine. We saw
for a while, Bing had something where like, I can't remember the exact, it was several years ago, but if you Binged, they would basically give you a rebate for Binging, right? So if you did 1,000 searches, you would get $1. So it was very small, but they were literally paying you to use the second thing. And I'm a value investor. I was like, oh, I'll get paid for it. And it wasn't even the quality of search. I just couldn't bring myself to break the habit of when I want to search for something, I go to Google or I just type it in my browser. But it just speaks to what you're saying, right? They literally couldn't they couldn't pay you to use the second best product.
For sure. And I think that will continue to happen both in consumer businesses, in transportation business. It'll happen to every vertical. And so this was sort of the core thesis to our firm is, disruption is happening and it's going to happen to every vertical. It's just a matter of time. Back when, if you looked at the portfolio 10 years ago, because our long only track record goes back to 2012, Arnie was really focused on the disruption of brick and mortar retail, looking at Amazon and the ability for Amazon to just scale. It was just this incredible scale business. And so the valuation techniques needed to change.
Yep.
Like in a disrupted vertical, cash earnings, it's just not that important. We're just not focused on cash earnings. The goal with any sort of disruptive business is land grab. I mean, it's just a territory shift. We just need to get new customers, grow our product or service, and so earnings will come. And you have to find the right leadership and the right businesses that can eventually spin off a ton of cash. But I think just going back to your comment about the internet and just sort of winner take all, that's very much how we view every vertical that we study, which is the likely, everything is probabilities, right? And so is there a chance that the future of transportation is evenly split among 10 companies? Like, sure, there is a small chance that something like that. I think the more likely reality is that we'll begin to see a winner take most dynamic continue to expand across the industry. And so that, that creates, natural pair trades that, this is a super messy time. I think, like, if you just look at sort of the industry, we're still really early, and it's going to get even messier over the next decade. Specifically in transportation. I think that you're going to see small companies today get really, really big. I think you're going to see big companies today get really small. And for us, that just creates opportunity. All of this change creates opportunity. It's healthy. We're going from less than really 5% of new sales being electric vehicles to eventually 100%.
Yep.
No question in my mind that eventually it'll be 100%. It's just a question of when that happens. And I think it could be a lot sooner than people realize. And so I think the core focus for us right now is, like, every day is a new day. We just sort of start with everything with a first principles approach and just ask, who's got the best product today? Who most likely has the best product tomorrow? And then, we kind of make our decisions accordingly from there.
I like how you said first principles. It's one of the things, again, coming from a little bit of a Tesla Q, which is the symbol for people who thought Tesla was going to go bankrupt thing. One of the big pushbacks on the AI driving was, hey, Tesla doesn't use LiDAR and everyone else uses LiDAR. And one time I heard Elon Musk say, hey, humans don't use LiDAR and humans are able to drive right now. And LiDAR is this big expensive thing. Like, if you really want to solve this and cheaply and cost effectively, like, you need to do it without LiDAR. So it's just one of those things. He went to first principles and he rebutted this thing that, again, that had been a big bear point for a long time. But let's go back to valuation for a second. So when we first started talking, one of the first things we said was, you said it was a chart crime, right? Tesla is valued against every other car company and they're worth more than every other car company. And people obviously look at them and they say, Toyota's selling 100 times the amount of cars Tesla sells, and look at all these big plants and all this history. Obviously, that's going to, a lot of that goes away in the technological change, but at some point valuation has to matter, right? So Tesla's over $1 trillion, worth more than every car company combined, worth more than every car company combined at the height of all of their values and stuff. So how do you look at the Tesla valuation?
You have to look forward. With any sort of business like Tesla, you have to look, at least 3 to 5 years out. We look out 3 to 5 years, and then ideally we're even looking, towards 2030, but 3 to 5 years is where we can really get a significant degree of confidence in where the business will be operating at. Look, there are very few, if any, historical examples of manufacturing firms at scale growing 50% a year. I would challenge anyone to really, find a $10 billion or more market cap company with hard manufacturing growing 50% a year for the next decade. They just don't exist. Tesla really is, in my opinion, the only large-scale manufacturing firm that has this growth trajectory. And so when you look at some of the, I suppose maybe like the sell side analysts and sort of how they're modeling out the growth over the next 3 to 5 years, I don't think that they're really factoring in necessarily truly 50% growth. The company is is opening, factories today. I think it's more than likely that they will be opening new gigafactories years from now as well, and that growth will compound over time. So, the other sort of I think main thing that we focus on is really the manufacturing techniques that are completely new to the auto industry, and frankly, this is really one of Tesla's core competencies and core advantages, is being able to not just manufacture at scale, but manufacture with improving margins over time. So I think, in Q3, you started to get a glimpse of some of the gap margins. It's like 14.6%, I think, in Q3. At a time when the average selling price of each vehicle is going down like 5-6%. So this is like a result of just completely retooling what it looks like to actually make in this case, a car. Over time, there'll be other products. That's like a profound revolution across the manufacturing industry.
Why isn't that? Because this reminds me of the stuff with Toyota in the 70s and 80s. Like at some point, there is a limit to how far ahead you can get with this, the marginal efficiency, right? There's a limit to how far ahead you can get in terms of manufacturing. So why is that such a sustainable advantage for Tesla? Like if GM, now there is the question, could they really commit themselves for 5 years? The cultural imperative, but maybe a Rivian or something. Like if one of these guys really commits themselves, is Tesla really going to be able to have that big of an edge for that long from manufacturing EVs better?
Yeah, it's not purely also a hardware it's also the software that enables these cars to actually improve over time with increased range abilities. I think the 4680 production line, we'll see, when it gets up and running, but the sort of scale and efficiencies that it can reach. I mean, I don't know what the future looks like in 5 years. All I know is kind of what's in front of us today. And Tesla is probably at least 5-6 years ahead of the competition. So I think that you will find the competitors coming to market. I think you're already seeing it with both startups like Lucid and Fisker and all these other EV companies, but also GM and Ford. They are producing electric vehicles. They're not doing it necessarily at a level of scale and profitability that's anywhere close to Tesla right now. And I think that the other thing that's sort of hard to conceptualize, but I think is very realistic, is Tesla's gains in manufacturing capabilities only compound over time. Because they have this culture of innovation and just constantly retooling the process. It's not a static sort of production line, right? The production capabilities are only going to increase from here, and the efficiencies are only going to increase. So 3 to 5 years out, I don't really see a meaningful competitor to Tesla that's able to produce cars at scale with a certain level of operating margin. And so we'll see, though. I mean, it's very encouraging to see companies like Rivian come to market. We love to see this competition. I think that having more electric vehicle companies expands the market for Tesla. I think that you see that with just how the whole auto industry has kind of woken up in the last year about talking about this. And
does it expand the industry? The way I've thought about it is the competition, like in general, competition is a bad thing for business, right? But in many ways, electric vehicle competition expands the industry because it builds out all the infrastructure needed for electric vehicles. Like first you get the consumer adoptions, which is helpful, but you get one big question. If you're doing a cross-country road trip, how are you going to do that? Well, if electric vehicle adoption expands, then there's going to be charging stations everywhere. Maybe it's a Tesla charger, or maybe it's just the convenience store down the street switches from gas to electric. So is that why it would expand the market? Like, because I think a lot of value investors would hear competition come in and say, oh, Eric's being silly, competition's bad, but it actually grows the market for everyone.
Yeah, I mean, absolutely. I think that we're going, the customer decides. And I think that if you just talk to people over the next year, you will increasingly find people say, yeah, I think my next car is going to be electric. And I think that's on an exponential growth curve, right? I don't think that's a linear thing where, 20% a year, more and more people are going to buy electric. No. And so then it becomes, well, who has the best value proposition? And value proposition is not, it's not just the quality of the car. It's not just price. It's all the things wrapped up into one. And you hinted at the charging network. If you try to take a road trip in a non-Tesla vehicle, it's really challenging. The supercharger network is an incredible advantage for Tesla as a selling point, as just something for the product's experience. The thing that keeps me sort of up at night and makes me nervous about the industry is seeing how slowly some of the incumbents have actually moved. I think a lot of the focus on Tesla is around just the valuation. Obviously that's something we think about a lot, but the real risk I see in the auto industry over the next 5 years are, what if some of these companies can't transition? What if they just can't do it? What if despite their best efforts to create new products, customers just don't want them? And so you could really see a potential for a big blow up across the auto industry, where these are companies like GM and Ford. I mean, they have significant amount of debt. Their ability to survive, I think, over the next decade will be decided in the next couple of years. So it's a really interesting time in the auto industry. If we will see this like true consolidation into one company, it remains to be seen. I think that right now, Tesla is building more and more durable advantages, and their competitors have been really slow. So we'll see what happens. We're watching it obviously pretty closely. Yeah.
So there's lots of growth optionality with Tesla. I mean, one of the things I think investors have learned over the past 10 years is if you've got a company that consumers love, there's always going to be lots of great growth optionality. But Tesla in particular has some pretty interesting, if consumers love you and they give you $100 for your product, that's one thing. But if consumers love you and they give you $50,000 for your product, that's another thing. Tesla's got lots of great growth optionality. I think the biggest one obviously would be if they win self-driving autonomous network of vehicles going across the country, that's cajillions. But there's been lots of debates around things like Tesla insurance operations or a couple other. Do you think there's any particular places where there's debate that you just think silly, or are there any growth optionalities that you think are particularly exciting that you think might be understated?
Yeah, that's a great question. So I think when we think about Tesla internally, we think that there's a few lotto tickets, right? So for me, I mean, I focus a lot on just the possibilities of end-to-end trucking logistics.
Yep.
So that's a $1 trillion vertical that Tesla has a meaningful ability to really disrupt. Another one really is energy storage. So if you look at sort of what the future of energy distribution looks like, it's more than likely a much more decentralized future than what we have today. So right now you have a local utility and you buy your energy from them. Great. That's great for the utility companies. But what if you have a battery pack in your car, a battery in your home, and you're able to sell excess energy back into the grid when you're not using it? So I think that virtual power plants and Tesla's auto bidder software are another potential lever of optionality. In addition to just the overall energy storage business. If you look at some of the projects that they've done, particularly in Australia, the Hornsdale project is really compelling just for stationary storage. I think this is just based on pure cost and efficiency. We are headed towards a solar and wind and battery powered future. The limitation right now is just battery production capability.
Yep. So
over time, you're going to see Tesla just continue to grow their battery energy business. Over time, I think also, the consumer solar business will grow. That's obviously not a super, it's not the most focused part of the business right now, because Tesla's just going after bigger opportunities with Megapack and some of the utility scale projects that they're working on. But I think that there's a ton of optionality within energy. I mean, Elon's commented, I think going back to Q3 2019 or maybe 2020, but just that, energy revenues could eventually eclipse the auto revenues. That's a big statement. And I think that what's so attractive about it is it's recurring revenue. It's recurring revenue. They take a transaction fee off of any sort of on auto bidder, or just the utility level energy distribution software. It's super scalable. We just kind of need the batteries right now, and
yeah. I used to cover utilities, and this was always the dream, and this is what you hoped. And I'll come to the Solar City stuff in a second, but this is what you hoped, right? Like the dream would be if you can get batteries cheap enough and they can store enough energy, you literally give every home on the block a battery. You put four solar tires on their roof, and when they're not using energy, it just stores it in the battery. And then when they are using energy, solar tires or the battery charges it, and you basically, yeah, you're going to need a grid for backup for high demands and stuff, but you can pretty much power every home. And if you're Tesla and you've got the best battery, like battery and solar panel, you're going to own that consumer once you put it in their house. It's a pretty crazy optionality. I mean, what's the EV of every electric utility in the country? Because that's pretty much what that could replace if successful. Obviously, you said it was a lotto ticket, so I'm fine saying that's probably a lotto ticket, but that's the dream, right?
Yeah, I mean, Tesla has filed to become an electric utility in a couple of places, and so I think over time, I mean, this is it's uncharted territory, and there are other companies that are competing for this business. So we're kind of watching a bunch. But as far as the ability for one company to both manufacture the batteries, to distribute the energy, and to really expand globally with footprints pretty much everywhere, it's a massive opportunity. So it's just something to keep an eye on. X auto and X truck and all the other stuff that they're working on.
So let me come for 45 minutes in this conversation. So Tesla, obviously the story is great and they dream big, but let me come back to the thing that was always a sticking point in my mind, right? And that's just the red flags that come out of Tesla. And the biggest one to me, I mean, you can go on Tesla Q Twitter and find some really quirky red flags if you want to get really into it. But the biggest one to me was always the first thing that jumped out to me. I remember the Ashley Vance Tesla book where I think it was Kimball who said, when Tesla was struggling in like 2009, he said, oh, Elon pulled some tricks that I think if it hadn't gone well, he would have gone to jail for, right? And that always stuck in the back of my mind, because then when the Solar City thing came up and there was the Potemkin village of Solar City houses that he used to sell the deal to Tesla shareholders, when I saw those two things together, I was like, oh, that is, that was just the screaming red flag. And there are a couple of others that we can talk about that I'm happy to talk about, but that was the biggest one where I saw that quote. And then 7 years later, I saw the Potemkin village. Are you familiar with it? I'll put the Vanity Fair or Rolling Stone or whatever it was in the show notes. I'm
familiar with all of it. I mean, there's
I was sure you were. I was just, yeah, but that was the red flag that jumped out to me that I wanted to ask you about.
Yeah, I mean, I've read everything that you've probably read too. I think that like what's so shocking to me, and frankly, it's probably a good thing, which is I just take such the opposite approach of how I think about Elon. And he's obviously like a, quote unquote controversial guy, but I think that like he's done some incredible things for, the transportation industry. I mean, he's a guy who's landed rockets that like no one has ever. So it's just like, I suppose that I'm so kind of, I'm not a fanboy whatsoever, but I'm more just shocked at how much negativity is associated with Elon.
And the craziest thing is when people say, when you hear Elon haters say, oh, what SpaceX did isn't impressive. And you're like, are you kidding me? The man revitalized American space flight. And this is insanely impressive. What are you talking about?
Yeah. And like, this is business. I mean, this is not like a popularity contest. Like I get that people don't like the guy. I think that, there's Elon as an individual, and he's a super interesting guy. Obviously, I think he's one of the smartest leaders out there in corporate America today. I think if you kind of like stack up a bunch of CEOs, he's an engineer, and Elon fundamentally understands how his products are made. He's not a sales guy. I think he's a brilliant sort of marketer. but principally he's an engineer. And so that's his focus. He's super quirky, but at the end of the day, I mean, he has like 65 million Twitter followers, and he sets the conversation. Tesla's never spent $1 on advertising. And so there's all these sort of benefits of him being sort of out there in the media and capturing headlines. I think that like this is another one of those situations where investors historically maybe get a little bit tripped up with like weighting information, and they weigh the information of what they see of Elon acting sort of quirky. But if you actually go and spend time at the factory at Tesla and talk to customers, Tesla is a much bigger organization than Elon himself. He has built this organization for sure. I think he's like imparted his own sort of he's very much imparted his own DNA into this organization. But the company is way bigger than Elon at this point. And I think that, takes a lot of risk off the table, which is, they're going to be producing next year over 1 million cars. I mean, they have some of the best engineers in the world. So I think that the whole Elon hating thing, over time, I think that kind of goes away. Does he do things that are provocative? Like, absolutely. But when I look at some other CEOs and sort of listen to kind of how they manage their businesses, that honestly makes me a little more queasy, just thinking about like, especially some of the competitors in the auto industry, just talking about the supposed transition to electric vehicles and then, not seeing it. So I don't know, I take very much the opposite perspective on Elon. And yeah.
You get bored following other companies after following Tesla for a while. Like, oh, this company, they're trying to grow earnings 4% per year, and the CEO isn't tweeting at senators that their profile picture looks like they just they're post coitus.
Yeah. No comment. I mean, I just think that he has created a product and a company that people are fascinated by. And I think that there is a ton of value in that. I mean, you can't really see it, maybe today, but I think over time, the value of the Tesla brand will become pretty apparent. I mean, it's, people love the product, of course, but people just know the brand internationally. I think that this is a huge strategic advantage for the company going forward, which is that they simply don't really have to do much advertising at all. They've spent zero. And in fact, now you see other companies using Tesla in their own advertising campaigns, like the Hertz deal with Tom Brady. I think that's just an incredible situation to be in as an investor, where you own a company that doesn't have to advertise, and you have other companies advertising on your behalf. So you talk about NPS scores and just consumer satisfaction. I mean, I think another huge element here is just the brand, especially in a sort of post-internet world where everyone's connected, everyone knows everything. The Tesla brand is a massive advantage.
It's legit crazy. I watch my beloved Saints on Sundays, and I see if there's 5 commercials per commercial break, 3 of them are for cars. And at this point, maybe 1 or 2 are for car manufacturers trying to pump their new electric vehicle. And so, they're auto manufacturers are advertising everywhere. And despite that, when you talk to someone who's getting a new car, the top of their wish list is probably going to be a Tesla, and Tesla has spent, again, $0. It just speaks to the consumer love. I think we've addressed most of the thoughts I wanted to. Is there anything else on, I've got one more question on Tesla, and then I want to talk Spotify for a quick second, but is there anything else on, the red flags at Tesla that we haven't addressed that you think maybe get people up in arms that you wanted to address?
I think that, no, I think a lot of those red flags are frankly kind of bullshit. I think that Tesla's so fascinating to me because it's like, it's a Rorschach test. I mean, 2 people can look at the same bit of information, the same data, and walk away with it with 2 totally different perspectives. So I think that, I just like love messy situations like this. I think like we're just drawn to, I mean, part of our ethos as a firm, it's just like we're drawn to this complexity because, this is all a big puzzle. We're just trying to put together the pieces.
What's the red flag at Tesla that you see bears cite the most that you think is the silliest, or, you guys see and y'all just laugh at the most?
there's a whole bunch, but I mean, like that, Tesla will never be profitable. I mean, that's something
That's been disproven.
yeah. I mean, and that's okay. I mean, I don't mind any of these critiques. I think that they're healthy. They created a great opportunity for us. If all information was accurate and there was no misleading articles, our edge would decay. A lot of edge just comes from knowledge and time arbitrage. And so this has been historically sort of one of the most divisive companies, which creates opportunity. So it's frustrating when I hear the bears arguments, but I also have to kind of give thanks for them.
My favorite is, just because it's so disproven, is the competition is going to kill Tesla. I think if you were citing this 3 or 4 years ago, it made sense. And there's a particular Tesla bear who, just publishes the list of all the upcoming EVs that are going to be Tesla killer. It's like, okay, but you've been saying this for 8 years and there's not really a demand problem for Tesla. We haven't seen one. Like, if competition was going to kill them, it's not to say that Tesla, a new product can't come along and supplant Tesla, or, markets evolve. But at this point, that's been so disproven. GM's not going to come all of a sudden with the Tesla killer or something. It's been so disproven. You're just citing the same old things for 7 years at this point.
I mean, we don't look, I mean, every day is a new day. Maybe tomorrow, there is a competitor that comes out with a product that's has a better value proposition. So I always want to keep an open mind. I will say it's pretty shocking to me how I used to live in New York, so I feel like I can criticize New York guys, but a lot of guys.
Hey, watch it! You're talking to someone coming to you from Manhattan right now.
I lived in Manhattan for 10 plus years, so I have a little Manhattan street cred. But there's like a New York mentality of like, saying things, but not really being able to back it up. And that's one example of this whole competitors are coming from Tesla. I go out and I speak to dealers and I test drive all of the competitors. I think that, the research process, you kind of have to just get out there and talk to people and experience these products for yourself. I mean, it's crazy to me that, people talk about the Tesla competitors and then have never actually driven any of these cars themselves. I mean, it's ludicrous. It's a product that you can just go easily walk into an Audi dealership and test drive the e-tron. And I guarantee that a lot of these guys who are criticizing Tesla and saying that e-tron's going to kill the Model 3, they've probably never even driven one. So I think that's just it's maybe a bit of laziness, or I'm not sure exactly what it is that compels people to have such a strong opinion about something without really just kind of doing the basic homework. But again, that's good for just the market and creating opportunity.
Yeah, there's a limit to what you can do, right? Like if you're looking at a space shuttle company, obviously you can't go fly a space shuttle yourself to test drive the product. But it reminds me, I was very bearish Peloton for a long time until I got the product and tried it, and then I was like, oh, like you can debate whether the stock's undervalued or an opportunity or not, but there is something different about this product. And in hindsight, I look at it and I was like, Andrew, that was pretty lazy, right? Like you don't have to go buy the Peloton, but you could have at least gone to the Peloton store down the street and like tried the product or something, right? So I agree with you on Tesla. Last thing on Tesla, we mentioned valuation a few times. I just want to come back to it. Tesla, I don't know where it is right now. It's around $1,100 per share, about a $1 trillion market cap. And we've mentioned valuation a few times. So I just want to ask, what's the fairish valuation for Tesla? Obviously, there's a whole range of outcomes, but how do you guys look at fair value for Tesla?
I don't want to use specifics because I think that's just out of deference to our partners and just how we view proprietary information.
Yep.
But we have really like a 3 to 5 year outlook, and we just think that the business is really still really early innings. I think we look for just the risk adjusted opportunity of businesses that can really compound at least 20 to 25% a year. Tesla's materially higher than that. So in addition to, sort of just the baseline of growth of the business, we think there's a lot of optionality, especially on the software side. So our value is, let's just say, significantly higher than where it's priced today.
Look, if you've got 2 minutes, I know we've gone for almost an hour, but if you've got 2 minutes, I just wanted to ask you a couple questions on one of my favorite companies, Spotify, if you've got a second.
I love Spotify. Yeah.
Spotify. Let's start. Same question I asked with Tesla. What is the biggest misperception about Spotify?
That it's a commoditized music service and that they're forever going to be paying out, 75% to the labels, and they'll never be profitable. And the podcast bet didn't work out. I think that's probably maybe the perception among the bears, at least. I think that dramatically underestimates just the power of the platform to grow to 1 billion users and find new ways to monetize those users, but more importantly, just create opportunities for creators. You're now a part-time podcaster in addition to an excellent investor, and so that this is like early. We're early in this journey of audio in general, and so Daniel Ek likes to say that video is a $1 trillion industry, and there's no reason that audio can't also be a $1 trillion industry. I very much believe that he's right, and that over time, the audio industry will be much more than just music and audiobooks, and frankly, more than just podcasts as well. I think it'll be more interactive. I think it will be sort of a hybrid between video and audio, and so I think that when I look at companies that are really trying to disrupt, an incumbent industry, I just see what Spotify is doing is they're going after, linear radio. They're going after the music industry by potentially disaggregating the labels. There's a lot of optionality in what Spotify is building. The number one thing that the company is focused on is just market share, just growing the business. And so Daniel talks a lot about this, about growing the user base to about 1 billion users, but more importantly, even growing the creator base from about, I think it's like 8 million on the platform to getting up to 50 million, and eventually maybe they'll have 200 million creators on the platform. So earnings are not really a prime concern for a company like Spotify right now. It's really just land grab and territory growth.
Oh, I 100% agree with you. I think, I can't remember his name, the old Spotify CFO, who was also the old Netflix CFO. He was so great because he framed it for investors so simple. He'd be like, look, I was at Netflix. This is Netflix 2.0, right? Everybody doubted us at Netflix. And every time we said, we're going to go into own content, it's going to create this sticky platform, our scale is going to be unbelievable. And he would say the same thing at Spotify. Do you think the Netflix 2.0 comparisons are fair? Because over time, I've started to think that it's actually going to be, I think the stock's got the same potential, but I think it's going to look a lot different for Spotify. So if I said Netflix 2.0, would you agree, disagree? Do you have tweaks to that?
There are elements that I agree with, which is the structural shift to own content through exclusive podcasts is certainly a Netflix-like sort of dynamic. I'd say what's more unlike Netflix is the growth in the advertising business. And so you heard Daniel talk about this, that the business is really it's in the future, the advertising revenue at Spotify won't just be 10% of overall revenue. The goal is really 20%, but maybe even 30-40%. So unlike Netflix, I think that Spotify is creating some really compelling opportunities for advertisers. And this is like uncharted territory. I mean, no one really has built, what really Spotify is doing is building like Google AdSense for audio. I mean, that doesn't exist at scale right now. I mean, if you look at like how media buys work across the radio industry, it's all like regional, and it's just based on personal relationships. You can't just go and have like a 30-second audio ad and just distribute it, immediately to the world and hit your demographic. Because it's available and anyone can do this. If people are curious about Spotify, sign up for an ad account if you were an advertiser, and just see what the platform looks like, and see if you were going to advertise a product or a service, how the back end looks, because I've done it and it's remarkable. I mean, it's very much like a Google-like platform for advertising, and I think that's going to be a real differentiator for the company going forward.
I'm saying this off the seat of my pants, but you said, hey, I think they could get up to 40% revenue from advertising. I think it could be higher in the long term if they really pushed on the podcast and the own content, because I think people just don't get podcast the original, they're so untargeted with the advertisements. I use this example all the time, but I listened to a Bill Simmons podcast once where he did an ad read for FanDuel online sports betting. And at the time, online sports betting was legalized in 8 states, and they weren't even 8 of the largest states in the US. It wasn't New York, which is where I live. It wasn't California. It wasn't Texas, but he did an ad for 8 states. And I just listened to that. And that was one of the things that clicked for me. I was like, if Spotify figures this out, they could just have Bill Simmons do 2 ad reads right here. One for the 8 states where sports betting is legal, and then one for for 42 other states, which could be anything. They could just segment it, and FanDuel would probably pay the exact same rate just to get those 8 states. And then the other 42 states, they could do a different thing. It's a better experience for me because I'm not hearing something from FanDuel and saying, God, I wish I could bet on the Saints this weekend. And it's a better experience for everyone, makes a ton more money. And that was just one of the little things that I heard where I was like, oh my God, the advertising opportunity on podcasting could be huge. I listen to podcasts and music. I know this is unique, but pretty much 10 hours a day, I'm listening to music in the background. It's just so much opportunity with that user base and everything. And somebody tweeted this today: how many companies are there with the potential to get to 1 billion users in the world that are trading for under $100 billion right now? Spotify might be the only one.
Yeah, there's only a handful. I totally agree with all of that. And I think that, if you just look at the CPMs on some of those ads, it's really attractive. And so, we'll see how it shakes out over time, what those percentages look like. But it's triple-digit growth on the ad business right now at Spotify, and they're firing on all cylinders.
What worries you most about Spotify?
That's a good question. So there isn't anything that is like materially threatening in the short term. I suppose you can make the argument that some of the bigger tech companies like Apple and Google really prevent Spotify from growing into what they can be. So I think you see that with kind of the Apple tax, just paying out and just Apple limiting the ability for apps within their ecosystem to kind of grow and flourish. So that's, I suppose, just a headwind or something that's concerning.
Isn't that Spotify playing on hard mode right now, though? And at some point, if that headwind ever dissipated, like, the company would be free to really unshackle?
I think so, yeah. And and I think that you just kind of have to think through some of the downside, and maybe growth is slower than anticipated. I think that's very unrealistic. I think that everything that I've seen and all the leading indicators are, there's ample opportunity ahead for the company to grow internationally. Some of the developing markets, especially, where it's hard, right? I mean, it's hard to launch in a developing market where you're still trying to figure out pricing options, advertisement. But I think over time, as long as management kind of stays focused on this goal, there's no material concern on that front. But any company, I mean, if they lose the plot, if the strategy shifts, we already have this sort of maxim of every day just start with a blank sheet of paper. So every day is day one to us. So if Spotify, if the position, if it's not working out, if things aren't going as kind of we planned, we'll reassess. But for now, we're really liking kind of the next couple of years in particular.
I didn't hear anything on music labels in that question. Music labels don't concern you?
Not particularly. I mean, the way I look at the music labels is, the value of the two-way marketplace to them is huge. So, I mean, at the end of the day, Spotify serves the artists. And so artists want a bigger fan base. Everyone wants to be a superstar. That is the core value proposition that Spotify can offer the artists. There's a great podcast a couple of weeks ago from an investor in UMG and just talking about why Taylor Swift still signs with a label.
Was that the Invest Like the Best one?
Yeah, it was.
He did a lot of work with it was the Roan Cunniff guy. I really enjoyed that one. I did a lot of work on UMG when PSTH was going to buy them, so I really enjoyed that one.
Yeah, so I guess my thought there is, it's a complementary relationship between Spotify and the label. So as much as, there's this tension and sort of, the payout ratio and all that, which is healthy. I think that Spotify will have more and more leverage over time. And I think that it's not like a, it's not a zero sum sort of relationship. I think they both win. You know, as long as you grow the audience, as long as you grow the amount of people on the platform, both sides win in that equation.
It's not perfect, but I came to look at it as Spotify is the loss leader for music labels and artists, where they get paid. It's not even a loss leader, right? They get paid money for streaming on Spotify, but they need Spotify to get the money from where they're really going to get the money, which for artists, it's streaming, it's advertising, or sorry, it's tickets, it's advertising, sponsorships, all that. And then for the labels, they're really going to get paid from all the external things, like getting paid from Peloton streaming, getting paid from TikTok, from Roblox, from all this sort of stuff. So that's kind of how I came to look at it. And are you familiar with one of the things that really clicked it for me was in South Korea, one of the small labels pulled their music from Spotify, and all the South Korean fans and the artists blamed the label, and eventually the label caved and came back to Spotify on Spotify terms. So that was one of the things that really instructed me on the dynamic there.
Yeah, I firmly believe that, you know, Spotify's mission is to serve creators and enable creators to kind of augment their craft for a wider audience. And so if you just look at the creator tools for podcasters, and then, you know, similarly, like just the ability for an up and coming artist to really get discovered and to push their craft on Spotify's platform. I mean, the value proposition for them is having an audience of, you know, right now about 400 million people, but eventually about 1 billion people worldwide. What that can do for your, you know, if you're an artist and you're going on, you know, a tour, to be able to advertise locally to fans that listen to your stuff on, you know, Spotify, and, you know, if you're going to Duluth or if you're going to, you know, Des Moines, to be able to kind of push just ticketing to those areas via, I mean, it's an incredible, you know, just data-driven platform that, you know, I think again is like working complementary with the labels for, you know, positive outcome on both sides.
Perfect. Well, hey, any longer and we're going to have to just turn this into a 2-part podcast or something. But Eric, this has been fantastic. Thanks so much for coming on. I'm looking forward to keeping the dialogue going forward, both offline and maybe having you on for another podcast, because you guys run a concentrated tech book. So it's pretty easy to call you out and talk about one of the things you guys are working on. But this has been great, and we'll keep it going.
All right. Thanks, Andrew. Thanks for having me.